Hello ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Have you ever wanted to crack something open and understand what makes it work? Well, we can do that in our trading as well. We do it by cracking open different charts and understanding what the market is thinking, what the market might think. And that's what we're going to do in this video, and trying to understand the euro versus US dollar and understanding what might happen in trading next week so that you can benefit from those moves. Are you interested? Stay right here. This is a picture of the euro versus US dollar. It's a weekly chart, and if you take a look at the low price going back to the beginning of the year, that low came in around the 103.39 level, and since that time the market's been trending and trending and trending to the upside to the point where we got to a high price just 3 weeks ago about the 120.92 level. So that's about 1700 pip move from the low to the high price. Pretty good move to the upside. The market must be bullish, right? Well, when I look at this weekly chart, I see something else. I see what has happened over the last 4 weeks of trading, and that isn't necessarily so bullish. In fact, over the last 4 trading weeks, the trading range has only been about 268 pips. Over the last 3 weeks of trading, which encompasses the month of September, the trading range is only 255 pips. And during that time, we saw the price move down, we saw it move up, we saw it move down, we saw it move up in the weekly bars. That's saying to me that the market doesn't really know what it wants to do up here. It's having trouble deciding whether it goes higher or lower from here, and that's okay. The market's unsure. Now, what I know about this 255 pip trading range for the month of September is that it is very narrow on a historical basis. In fact, I went back to the end of 2006 and looked at what is the trading ranges over all those months, and there's only been 6 trading months with ranges that have been lower than the current 255 pip trading range. So we're in a month here that is kind of non-trending. We have 1 more week in the month, and that says to me, do we extend the trading range, get something more normal in the month of September? That's what I'll be looking for. I'll be looking for a break one way or the other. But what we know from the price action is that the market's really unsure of what it wants to do. We also know that from the technicals. And what do I mean by that? Well, if I take a look at the euro versus US dollar and go back in time, if I were to take a look at the low price going back to 2010, that low price came in at the 118.76. Our low price in trading this week came in at 118.61. So we got within 15 pips of that, what should have been a key support level, okay? And so the market found support near our support target and bounced off of that level. Now on the top side, our high price came in at 120.32. And what was the significance of the 120.32 level? And if I go back in time and go back to this low, going back to 2012, this swing low came in at 120.42. Our high price this week, 120.32. Our swing low from 2012, 120.42. Got within 10 pips of that swing level. That says to me that the market moved up to the resistance level, found sellers against that level, and moved back to the downside. So we're trading in between a support level down below at 118.76 and a resistance level above at 120.42. Market is unsure. When the market's unsure, it'll carve out these support and resistance levels and trade in between them. That's what we saw in trading here today. So what does that say about next week's trading? Well, if we're going to break out, we have to break out of that range. We have to look for an extension either to the upside or move it to the downside, and for the market to say, forget about the past, let's go to the future. Let's move either lower to the downside or higher to the upside. And on the top side, if we were to break above the 42 level, there is still one more level that's of key importance to me in trading on the top side, and that comes in at the 120.96.8 level, and that level represents the 38.2 of the move down from this high right here to this low right here. 38.2 comes in at 120.96. Our high price that we stalled against 3 weeks ago came in at 120.92. Sellers were leaning against 38.2. They said it's time to take a breath, and over the last couple weeks and this week's trading, we've taken that breath. We've consolidated in a narrower trading range, and it's now time to break out. So if we're going to break to the upside, we need to get above the 42 level. We then need to get above the 120.96.8 level. Understand that if we're able to do that, we have the potential potential to move ultimately up to the 50% retracement level. Not saying it's going to go there anytime soon, but we could see further bullish momentum up toward that level over time. 126.39 level, 50% retracement, the same move to the downside. Now, that's our move to the upside. What about if the market should decide to go to the downside? If it decides that this high right here is the high that we're going to see for the rest of the year, or for the next couple weeks, or the next month, and we're going to move to the downside, what should we see? Well, I'm going to drill down to the 4-hour chart just to make the importance of the 118.76 level even more important. And if I go to the 4-hour chart and I take a look at this green line represents the 200 bar moving average on the 4-hour chart. And if you notice, where does that level currently come in? At the 118.74 level. So we're just 2 pips away from the 118.76 low from 2010. If on our move to the downside this trading week on the FOMC decision, where did the market find support? Right against that 200 bar moving average. Yes, we moved a pip or 2 below the level on this bar right here, but you can understand the momentum was moving sharply to the downside. Ultimately, though, we did find support against that 200 bar moving average, key level going back in time. So this is going to be our key support level. If we break below that level, I can anticipate that the market is going to move more sharply to the downside, and you should too. Look for a break of these lows right through here to help confirm the downside. We should see further downward momentum. Where could we go on the downside? And if I go to the weekly chart and take a look at the 200 week moving average, that currently comes in at around the 117.27 level. The high swing price from 2015 here came in at 117.11. I can imagine that the 200 week moving average will be lower next week trading. It's going to come in around that 117.11 level. That's where we'd be targeting on the downside for the euro versus US dollar over time. So we have our parameters set now. Is there anything in between that we could hang our hats on? And if I take a look at the 4-hour chart and look at this blue line right here, this blue line is where the market's going to be going out here on Friday or near it. That level is the 200 bar moving average on the 4-hour chart. And in next week's trading, I'm going to use this line as our barometer for bullish above and bearish below. If we trade above it and start to move away from it, that's going to be more bullish. Look for the market to move up toward our resistance level. Look for a breakout to the top side. If the market trades below the 100 bar moving average, then look for more bearish sentiment to the downside. Look for a test of the 118.76 level. If we get below that level, we should see the market move to the downside. So ladies and gentlemen, we now opened up the euro versus US dollar. We understand what the weekly chart is saying to us. We understand what the 4-hour chart is saying to us. We now need to just follow what the price action is going to tell us, what the market is going to tell us through that price action by utilizing the tools that are given to us that allow us to understand what is actually going on. If you like this video, give it a thumbs up. If you don't like it, you're free to give it a thumbs down as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.